What is up, YouTube? Welcome back to Stocks by the Numbers, and today we're jumping into an automobile company, which I'm sure a lot of people have heard of, or at least know their brands. We're talking about the General Motors Company here, ticker symbol GM, listed here on the New York Stock Exchange. Company closed here today, market closed roughly 40 minutes ago. We're looking at $38.20 a share. We have a year low of $30.33 and a year high of $67.21, so the company is obviously near the lower end of that 52-week range. We have a market cap 54 and a quarter, PE of roughly 6.5, and they pay you a little under 1% dividend to own the stock. Not the worst case scenario out there. Little background here, as you can see, American company, Detroit, Michigan, largest automaker in the United States, was the largest in the world for a while before Toyota, and their brands, Chevy, Buick, GMC, Cadillac. Okay, so basically what we're talking about is this company going to maintain or increase its current value moving forward? And, again, I know I do a lot of videos. Well, I was asked to do videos about, some of these other electric vehicle companies. The big difference is, if I had to make a bet, I personally would most likely probably invest into a brand name company like General Motors as opposed to, a newer company like a Mullen or a PSNY. Again, nothing against those companies, but as we looked, Mullen, not going to be in production for like another year and a half. PSNY, literally just started, right? So they're just getting their cars out on the road. GM, I'm sure you and I both know, we're talking, again, about a multi-billion-dollar company here that has been around for, 1908. So the company's been around for over 100 years. I mean, if we had to bet as to which company will see success and, have their vehicles on the road, we will most likely lean towards the General Motors Company. Now, again, not slighting any other EV company or automobile maker, but, I'm sure you guys can read between the lines and appreciate, what I'm laying down for you here. So, again, back to the numbers here. We're looking at 54 and a quarter. We come down here, as you can see, last year, $127 billion, right? So the company did have slight pullbacks in their revenue going into the 2020 pandemic era, but as you can see, has rebounded as of last year, not only bringing in more revenue, but increasing the income off of said revenue. And if we switch over here quarterly, this just looks beautiful. We have, slow and steady growth over the last 4 or 5 quarters. We're net income positive. And another thing I wanted to show you here, 2021, right, 127 billion. They brought in 10 billion income. Okay, we switch over here quarterly and look at this. Right, here's 36 billion. We'll say 36 billion again, and we got 42 billion. Right, so what's this? Those two are 72 billion plus 42 billion is, we'll say, 114 billion. Right, 3.3 income, 1.7 billion income, 3 billion income. So that's 8 billion income. Right, so we're up to, so far for 2022, we have 114 billion revenue and 8 billion income. Compared to last year, as you can see, chances are the company, I would say there's like a 99% chance that they're going to bring in more than 127 billion in revenue for the year of 2022. And as long as they profit 2 billion plus off of that last quarter, this company is either going to maintain or have an increase in their net income off of their yearly revenue, which, as we can see, would make it one of the most profitable years, especially since 2017, right? So a couple of numbers there to keep in your hat. And again, the company's paying you to own the stock, so even if you start to piece your way in here and it does start to pull back slightly, they're paying you to hold shares, so it could be worse. We switch over here to the financials here, and I just wanted to show you guys, the PE was for many years, around that 5 3/4. You're seeing 6 level, jumps up to 8, over 9.5, and even 8 3/4. And look, this was 2020, 2021, right? So the company had a higher PE and was trading at a greater multiple when the shit was really hitting the fan. Now we pull back to sub 6.5, right? So the lowest has been in the last several years. So, definitely raising a flag here as a potential buying opportunity. Price to sales ratio, as we see, was maintaining like that 0.3, maybe around that 0.4, jumps up to 0.5, almost 0.7 and has now pulled back to sub 0.4 again. The price to cash flow ratio, yes, that's what it is, as we see here, almost 5, drops down into the 3s, spikes up to almost 6, back down into the 3s. The price to book, though, obviously is the one thing that really caught my attention, because as you can see, this company for several years was trading above that book value level and is now trading at 0.8 of book value. So again, the book value, just to remind everyone, is basically what the company is actually worth, right? Not the overinflated value of the market cap since they went public. When we talk about book value, we're talking about if they sell their factories, their facilities, their patents, if they liquidate all assets. That is the value of the company, the book value. And as you can see, with the stock trading at 38.20, our book value of 0.8, that tells us that the stock is technically worth more than 38.20 a share on paper. So that, in my opinion, always helps, add fuel to the fire if I'm ready to push the buy button here on a stock. That's just my opinion, though. We come down here to the profitability ratios, and again, as we looked at with a lot of other companies, and I'm sure you've seen when you've done your own personal due diligence on any stocks, is that the profitability ratios have been pulling back as of the last year or two, with hyperinflation, shipping costs going up, gasoline prices rising. So all of that is now slightly eating into companies' profits, and that's why you have companies, spinning off divisions, or, just liquidating their assets or divisions, or potentially laying off a handful of workers to keep these ratios, more attractive for short and long-term investors. But again, come down here, was almost 5%, pulled back to 4%, almost went flat and negative, had a nice bounce back here, was only showing 3 to 4% almost, and now is pulled back to slightly 4%. So that's not too bad. The return on equity, though, as you can see, aside from this year, was high teens, low 20s. Dropped down to sub 15, got up to almost over 19, and is now pulled back to about 16 and a quarter. So that's a big chunk right there. That would probably be the first red flag that I would notice here. The return on invested capital, as we see up and down with the rest of the numbers, almost 8%, pulled back to 7%. Could be worse. The gross margin percentage is the one that took a big chunk, a big hit here. Was over 20% here as of last year, now sitting at 14%. Operating margin has increased, going from 7.3% up to 8.1%. And the EBITDA, once again, earnings before interest, taxes, depreciation, amortization, has decreased from almost 17% down to 14.75%. And we looked before at the profitability and the net income and net margin percentage, and as we can see, has maintained that 7.89 level, highest it has been in several years. So again, 1 or 2 profitability ratios are red flags. However, some of them are, viewed as stable flags and potentially even green flags. Random pop up on stock charts. We're switching over here. We're looking at GM on the daily. And as you can see, RSI sub 50, and I want to show you this 200-day moving average has pulled down to 37.90, and as you can see here, the little box above shows you the OHLC. That's the open, the high, the low, the close, the volume, right? That's what all those figures mean, in case you weren't aware. And this 200-day moving average, 37.90, as you can see, on this day we dropped down and then we came up and closed. Look at the C, 38.02. Right now, next day, as you can see, bearish hammer almost comes down, starts to regain some value, closes 37.96, right? So still above that moving average. And now today we have a little bit of a green day, up a little over 0.5%, and we close at 38.20, right? Now note the 50-day moving average here at 37.11. However, the MACD is slightly pulling back, but might start to turn right here, it looks like. However, I'm just showing you that we do have some support levels here at, the high 37s, low 37s. So on the daily chart, not too much pullback in the near future. You could potentially say that. Switch over here to the weekly, and again we have an RSI sub 50, and this is showing you also that the 50-day moving average was spiked up January 2022, and has since begun to pull back with the recent sell-off here with the price of the stock. However, the 50-day is now roughly 40.5, and the 200-day is 40.75, right? So these are our new resistance levels here. As you can see, it tried to break above and has since pulled back, and we do have a bottom Bollinger Band down here of, the low 32s. However, it did sell off, hit the mid Bollinger Band here of 37.75, and then kind of bounce up, and it closed here today at 38.20. So we could potentially have some stability here and see a short-term pop back up to the 40 range for it to try to maintain its moving averages. However, we did go over the numbers: 120, 140 billion in yearly revenue. They're making a good percentage of profit off of that, and right now the company has a market cap of 54 billion. So, again, the short term, like I always say, might be rocky and volatile. However, looking at those numbers, I do see some positives here and some stability in General Motors. And if I started buying here at 38 and change and it pulled back to 35, 34, like I always say, yes, it would suck in the short term, but we know what we know, right? And we have stability in a company that has since, turned some of its numbers around as of late, the last year and a half, we'll say 2 years. And again, everybody's going to be diving at these electric vehicles, and I'm sure a lot of people are going to feel more comfortable, we'll say, buying through General Motors as opposed to a newer company or a smaller cap company that doesn't have the same reach or same assets as a company like General Motors, right? So we'll leave it there. Basically, at the end of the day, I would say I'm like an 80-90% on the buy side here of General Motors. But yeah, I'll leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm. Helps me get a few more eyes on the channel. If you appreciate the content I'm putting out, please push the subscribe button. Definitely helps me out. Obviously, I appreciate seeing the community grow. Recently hit our first milestone of over 100 subscribers. You guys are awesome. I just really appreciate that. You appreciate some of the content I'm putting out. And again, we're not always going to be right, but I know we're not always going to be wrong. And just moving forward, even if you don't take my advice, I just want you to just appreciate perhaps a little bit of an unpopular viewpoint, and hopefully that'll help you make an educated decision moving forward. But like I always say, I know markets are rocky, volatile, and uncertain, so I do wish everyone success. I hope everyone makes a couple of dollars, and I'll see you guys in the next one. Thanks for stopping by.